Hello everyone, welcome to Just Invest Today, and today we have another video talking about Alibaba, and man, the government just laid down more fines on Alibaba, man. So this is just happening, and this is new news, man. January 5th, the government has been laying down these fines for quite some time now. I think the market is kind of getting tired and they already understand what's happening, as look at the stock chart. Alibaba's already up 5% today, which is a nice kind of run up. But even if it's up 5% today, people are still looking at the government as, man, damn, this is going to take down Alibaba, Tencent, Bilibili, all of these companies. But we have to remember, and we got to stay focused on the subject. But before we really get into it, guys, please like this video, subscribe to my channel. I'm always providing you with so much content. So yes, the government did just hand out this fine. In this video, we're going to watch a video about the Chinese Regulatory Commission actually talking about what's happening in China. So this is you're going to hear from the horse's mouth what is happening in China and what's going on. And you are going to have your own perspective and what you think about what he's talking about. And we're going to get into it. But look at this. So the fines hand out to Alibaba, to Tencent, because they're not reporting deals that they're making, because they're acquiring a lot of companies and they're not telling the government. But think about this first. These rules have been kind of just laid out heavily in the last year. This wasn't a really stringent rule back in the day when it comes to China and everything. So now they're kind of looking forward and saying, like, they're looking forward and backwards, saying that, damn, we kind of laid low on all of these rules, and now we gotta make sure these companies stay in line. This is happening all over the world. It's not a Chinese thing, and that's what people forget. Amazon goes through this. They can't just acquire companies without going through the government and making sure it's fair. Like, AMD is dealing with this right now. Google, Facebook, everything is, like, every company deals with this. So this is not an isolated, just a Chinese, oh my god, the government. And that's how the media is painting it. But that's not the case, guys. You gotta stay focused on what's really happening. China just deals with this because they want a fair kind of economy now going forward. They want a fair economy like every other government, every other country does the exact same thing. So this is not a bad thing. This is just leading to more regulation, as these companies just can't acquire all of these new companies and keep acquiring and keeping getting too big. This happens in every government, in every system. So this is actually doing the right thing, not the wrong thing when you think about it. This is making sure that companies kind of stay in line and just don't get too big, don't get too powerful. Amazon's like this, Facebook's like this, Google, Apple, every single company deals with this. So this is not some Alibaba, Tencent, Bilibili, JD isolated incident. So that's that. But guys, this is the big news too. When you really think about it, this is the big news. The government came out. This is the Chinese Security Commission saying this. The regulatory body saying this and laying down the fundamental truth about what's happening. So let's get into it right now. Shout out to this guy. I think his name's Sal. Great news from China's Securities Market Regulator. The CSRC co-vice chairman says registration and oversight of Chinese companies prior to US IPOs can limit accounting frauds and shenanigans and regulatory risks that have plagued Chinese listings like Luckin Coffee. So we're going to watch it and let's see what he says. We're going to break it down for you guys.
And something, of course, that has really gained a lot of attention recently are the new draft rules for Chinese companies to list overseas. The CSRC has recently released a new set of draft rules on this topic. I want to first understand sort of what are the major elements in this new draft rule, as well as perhaps the institutional arrangements behind the draft rules, trying to understand the thinking, perhaps the thought process of regulators.
Yeah, that's a good question. I'm very happy to answer that because a lot of international investors are interested in knowing about it. You know, previously, prior to this draft rule, the so-called red chip companies, their overseas listing, whether it's listed in New York or in Hong Kong, are not regulated by the CSRC at all. there's a problem.
So the company's listing was not regulated at all on this government body. They weren't regulated. So these companies that were just listing overseas, they could have done whatever. It didn't matter. They could have security risks. They can be breaching like all this private stuff. They could be frauds, and they had no oversight. And they were just IPOing in New York in whatever country. They had no regulatory body overhang. So now the government is saying now they're gonna have regulatory body. So before you IPO, you have to go through them. This is actually increasing, actually helping Chinese companies become stronger.
Problem to that, because when one of these companies violated some regulatory rules in a foreign market, you take an example of Luckin Coffee, to investigate it, right?
Yeah.
And the SEC had to come to us for cooperation in terms of investigation, because all Luckin Coffee's operations are in the Chinese mainland. But before SEC came to us, we even did not know that Luckin Coffee, had gone to New York and has been listed there.
This was what was happening. These companies were just listing in New York without the Chinese backing, without knowing what was happening. And that was okay back in the day because they had no regulation. Remember, their economy wasn't focused on the security market, focused on kind of building its infrastructure. Remember, this is all new to the Chinese. They're just getting a hang of stuff. So this is what's happening. All this regulatory pressure is coming because they're trying to establish a strong market moving forward. And they were looking back to make sure all these companies weren't doing bad things, because before they didn't have any handle. They didn't even know companies were listing overseas. That's how relaxed the rules were. It's pretty crazy when you think about it.
Because it never went through the CSRC. Because technically it was registered in Cayman Island, and it was considered a foreign company, not under the jurisdiction of the Chinese security regulators. So this new rule makes up this gap. We are still soliciting opinion for this rule, right?
Yeah.
But I think the rule will be formally issued in about a month's time.
So the rules are going to be issued in a month's time. See? And this is what's happening. They're having rules and regulations to how Chinese companies cannot just list overseas just randomly without confronting the government, not even talking about it, because there's going to be security stuff, security issues. There's going to be fraud issues. So now they actually have a chance to do their job and regulate these companies, not just randomly listing on exchanges.
And since by that time, all the companies, whether they are listed, whether they are registered in Chinese mainland or in any offshore locations, as long as their major operations are in Chinese mainland, if they go to list abroad, they have to come to the CSRC first for registration, right? And we will look at their application, and whether we will register them or not depends on a institutional process, right?
Yeah.
And if, for example,
So they can't just register themselves in New York Stock Exchange anymore. That is good news. So that's, again, just preventing all the ill will of the Luckin Coffees, of the Didis of the world. 'Cause remember, Didi just registered their company overseas without talking with the government. Now you can't just do those type of things. Those are going to actually hurt the company. So all this regulation, when you think about it, that's how I'm saying, that's the narrative. People are spinning it in a bad way, and that's why I'm so bullish, because they're saying it, they're talking to you. Are we just gonna not believe what the freaking regulation body is saying? We're just gonna ignore it and just say they're frauds, they're this, they're that, they're lying? I just don't see it that way.
for example, if you are a internet company, right, and you want to list in New York, fine, it's welcome, right? But then you have to come to the CSRC with an application for doing that, and the CSRC would initiate an internal interdepartmental process to approve this company, because a lot of these internet-based companies have sensitive data. And once it's approved, the CSRC will give them a formal pass right? And then the SEC will be much assured because this company has, went through an approval process in China,
Yeah.
and similar situations as DD, right,
Yeah.
will not happen.
See, and there you have it. The companies now have to go through the CSRC before they're listing, and they gotta be approved by a regulatory body, the Chinese government, before they can even list. So you're not gonna have another DD, you're not gonna have another Luckin Coffee anymore. How is that a bad thing for all of these companies that are gonna be listing in the New York Stock Exchange from here on out? This is all good news. This is all amazing. This is all bullish signals how the Chinese economy is getting stronger. They're trying to regulate it more.
So I think that this new regulation gives companies a formal process to follow and give overseas regulators a confidence in the Chinese companies that go to list in their market.
So there you have it. Going forward, you're going to be more confident in these companies actually abiding by the law, doing the right thing, having structure. Most people think this is just all bad news. Like the Chinese government is out to cancel Baba, JD.com, and Tencent. If they were, why wouldn't they just do it now? Why would they just peddle around and hand down $75,000 fines and do all that stuff? Well, like, it's the Chinese government. They're just gonna take the company now. They won't hand out fines. Like, why would they be handing out little fines here and there? If it's the Chinese government and we know how they are, they'll just shut it down right away. If they were really that way, if they really wanted to do it, why would they just lead us on? Like, it doesn't make sense. If they wanted to shut it down, they would just do it right away. That's how they always have been acting. So that's why it doesn't make sense that they're just handing out little fines here and there. If they want to shut down Baba, they would do it right now. They wouldn't kind of sprinkle it here and there. It's a Chinese government we're talking about. They would take it down right now. So it doesn't make sense that people think they're just so out for Baba, Tencent, PDD, JD.com, whatever it is, man. So what is your opinion on this, man? Tell me what you think. If I'm right, if I'm wrong, whatever it is, guys, please like and subscribe to this channel, man. Thank you so much.